Welcome to a Wiser Retirement podcast. Before we get started with the episode, I wanted to let you know about a new free ebook available on our website. This ebook goes over the top reasons most financial plans fail and covers what a quality financial plan should consist of. The link to download Top Reasons Most Financial Plans Fail is listed in the episode notes. Now on to today's episode.
Welcome to a Wiser Retirement Podcast, where we believe the best financial advice should always be conflict-free. I'm your host, Casey Smith, guiding you to financial freedom. Today is my co-host, Brad Lyons. Hey, Brad.
Hi, Casey.
All right, Brad. So we have talked about in our pre-show prep for this, we're going to talk about investing through times of fear. So the prep for this, you had a homework assignment.
I did.
And your homework assignment was to create or list out all the doomsday scenarios that you could find on the web or in your brain.
That is the case. I found 37.
We have 37 reasons why you should all stop listening to this podcast, liquidate everything, and run for the hills or your local bunker.
Well, it's interesting that last year was one of the more difficult years for investing, but investors for the most part hung in there. Okay, they really did. We didn't get a lot of phone calls saying that I'm done, I'm over, I can't do this anymore.
True,
okay?
But in the worst time, I will add to that, because I was thinking about this after our conversation. I'll add to that I also sent out a lot of emails.
Well, communication is key. Yes,
because I was like, man, this is kind of a scary period of 2022. I haven't done that as much this year because I'm actually feeling pretty positive. But I think I made one mistake in that, I read the Wall Street Journal, but I don't watch as much TV and news. And when you start looking through these headlines that you found, this is terrible.
It really is.
The market's up year to date. Everyone's made money in 2023.
That we want to get to that. Yeah. Well, I think there's a lag. I think there's a lag in people's thought process. That we're busy with jobs and work and everything. And by the year end, all this is accumulated last year. It all began to accumulate in people's minds. And now they're beginning to process it. We're only into the year a couple of months.
Right.
And now we're maybe starting to see some of the ramifications of investors' moods from last year starting to roost in this year.
I don't understand it though, because I'm like, I know people just don't look at statements and they, it's like, I need to hire like a drummer boy every time they come in for review meetings with me or Missy, because she's like, I didn't even look at my balance in the last year. And I'm like, oh Lord, that's why we always start with planning first, because we always show our clients that they're still on track. I've never had anyone get off track because of markets ever, but it's just, there's this added fear and we'll dive into this, but sometimes it's political, right?
Right.
And because your president isn't in office, you think the world's falling in. And we experienced this with Trump. We had families that are very passionate that Trump's going to wreck the world, and they missed out on some double-digit rate of returns for a couple of years. And then now the tide has shifted where Biden's going to ruin the world, and I don't want people to be missing out on double-digit returns either.
Right.
And the reality is none of it really matters. And we could have a whole podcast.
Well, I have a whole series of podcasts.
Correct. On why who's president doesn't affect the stock market.
Right.
There are certain things that certainly affect the stock market because of what the president does, but you're looking at very small sections of time when you're investing for your lifetime. It just doesn't matter. Now, if a president is talking about, shutting down free market capitalism and the government's going to take over operating businesses, okay, that's a whole different ball game. And the closest we ever got to that was probably Bernie Sanders and Donald Trump running against each other, right? So,
yeah. But what happens in these scenarios as different administrations come through, and different administrations have different ideas and ways that they want to govern, business managers adjust.
Yes.
And that's the point.
Yes.
That the businesses adjust to the current times and the current conditions.
If, Biden's elected, Democrats were in control for almost 2 years, and everyone's green agenda. Nothing's changed with the environmental laws, right? Now there were some things that the agency controls, but at the congressional level, there were no major changes. No green law passed, anything like that, right? And so for all those managers that tilted toward more Democrat-favored companies, you lost out big time. And so it just goes to show that this is why indexing is the best way to be invested. You own 6,700 companies, you own 10,000 plus bonds. You're not going to go to zero, right?
Right.
Or if you just want to even make it more simpler, just look at the S&P 500. It's 500 companies here in the U.S. Yeah, it's just not going to matter that much because you're not trying to. Our mandate's not to get our clients rich overnight. Most of our clients are already wealthy, or they're accumulating wealth over time. We're not trying to win the quick buck, right? And so that changes your mindset a little bit, and how you should react in a portfolio to all this.
Well, in an index, you're covering the 11 different industry sectors,
right?
Right. So if an administration makes a decision that has effect on one industry sector, it generally is going to have a perhaps equal and opposite reaction to another industry sector. So by investing in all the sectors, you're going to get the benefit of all decisions made.
What's funny is you get an average rate of return by investing in all the sectors. And over the next 10 years, your active fund managers have a 6% chance of beating that average.
Right.
Over a 20-year period, they have a 2% chance of beating that average. And that's what I just keep telling people is, why do you think there's a secret sauce to all this? There's no secret sauce. It's very plain. It's right in front of you. It's so easy, and yet so many people don't do it. And we even see it in our own benchmarking. We're mostly passive investors. We have some tactical allocations that we do, but yet we continue to be in the top percentile compared to our peers. And we do that through an accounting software that we share with other companies, not our data, but the company that owns the software gets rid of all the company names, and they said, this is where you rank in portfolio performance. This is where you rank in company growth. And it's very interesting. It's only 3,500 companies, but they're all independent firms like ours.
Right. Advisory firms.
Correct. Mm-hmm. And you can spot the ones that probably have weird trading strategies by their rate of return over the last couple of years. But let's get to our doomsday list. And I don't know, this is 37, Brad. I mean, are we going to have to people have to listen to us on 1.5 or 2.0 times to get through these. So let's just
and just a little bit ago, you told me it was time for the podcast. I might have kept going if they're.
I know, right?
Well, and the point being here is that each and every one of these has a debilitating factor in our minds.
Right.
Okay, if we were to assign a number to it and then add up the number, that would be the total score of all these things that are bothering people right now. But each and every one of them, there's probably not one that's going to stop anybody from investing. Right. Not going to stop anybody from doing what their goals are.
All of them together.
Yeah. But you start picking away at this one after another.
Yeah. All right. I got more I can add to these.
Well, good.
Just looking at it, but let's get through these through rapid fire.
Exactly.
So let's start with one.
Recession in the economy. This is a big concern for people right now. And yet, at the same time, I was just looking at the GDP Now forecast.
Yep.
It's at 2.7%, I think, for the quarter.
Correct.
Exactly. So,
there's a good chance we don't have a recession this year.
Exactly.
So people talk about recession. Another thing, Morningstar just came out with a report talking about what does recession mean for portfolios. It's actually pretty good. 2 to 3 years later, the total rate of return. I mean, it's high tides lift all boats, right?
Mm-hmm. for us index investors.
When you have recessions, it weeds out the companies that are weaker sometimes.
Mm-hmm.
So I don't know. We probably really shouldn't be that worried about a portfolio in your recession. And if you're about to retire and you're a wiser client, we've been building cash anyway, getting ready for your retirement. So not that big a deal.
And I think to your point earlier, we've never had to tell anybody they couldn't retire because of market performance.
No, never. Right. Not in 23 years anyway.
Mm-hmm.
Inflation.
Inflation.
Yeah,
It's
rising prices.
Prices rise. Inflation is a monetary phenomenon. We've had very, very, very low inflation over the previous 10 to 15 years.
Right.
Now it's picking up.
I don't know. That report 2 Fridays ago kind of scared me a little bit. Not scared me, but startled me to go, crap. I mean, the Feds don't have to keep raising rates because people keep spending money and buying stuff.
People like things.
So I don't know. I mean, I think inflation is concerning, but that's actually why you invest in stocks over bonds, because stocks can keep up with inflation much better than bonds can.
That's right.
So yeah, historically you have pretty big sell-offs actually at the beginning of inflation, but at the tail end you have great, bull markets, right? So again, the inverted yield curve. I don't hear this from clients very much.
We don't hear it from clients, but we hear it on TV and the news. And if you're out there watching and listening to MSNBC or CNBC and all these other channels, you hear this over and over and over. And what
First
is
of all,
this?
nobody listens to MSNBC, but CNBC, yes. And that, correct.
Yeah.
Yeah.
And it's simply that, investors are taking the mindset and they're going to put their monies where their thought is that in the future, interest rates are going to come back down.
Yes, you can see that
short-term interest rates are high, long-term their interest rates are lower.
You see that in CD rates right now. So I can get a 5% 1-year CD,
right,
or a 2-year CD I can get for 2%.
Exactly,
right.
That's exactly right.
So that's a real life example of. That's not the official yield curve, but that's a real life example of that, right? They believe that the Fed's going to wreck this thing and basically
have to lower rates to bring back the economy.
Yeah, exactly. Interest rates and mortgage rates continue to rise,
as we were just talking about. But here is the mortgage rates. So that housing affordability,
right, is
lowering, or getting lower. So, but what's happening is we're seeing that housing prices are starting to come down a bit, adjusting for the higher interest rates.
Yeah. The price comes down, but the yield's higher. You think it would balance out, but it doesn't. You're just better off with a lower yield or a lower rate, period. But yes, that can be concerning if you're trying to buy a house or move.
Right. The other side, the flip side to higher interest rates is all the savers out there are going to have more money.
That's very true. Those 4% high yield savings accounts didn't just create themselves overnight. Nope. It's not the companies being nice. It's because the 10-year treasuries now, or even the 2-year treasury now is up over 4%, right? Cryptocurrencies versus US dollar. So I don't know why people wouldn't be investing because of cryptocurrencies, but maybe they think that the cryptocurrencies are going to replace the US dollar. I mean, the US is kind of doing some research experimenting with a digital-based dollar, but it'd still be the dollar. We're not talking about eliminating our currency and creating a new currency in the U.S. Potentially, they could be concerned about Bitcoin's going to take over U.S. currency, or some type of crypto is going to be the world currency instead of U.S. currency.
That's the one. Yeah,
I think that's kind of
the one worlders.
I think that's pretty far-fetched.
Yeah. It is
where we
as
are
much
today.
Of this on this list is, but these are kind of a drip campaign sort of thing.
Right. Russian invasion of Ukraine. So that's become very polarized politically now. Before it's like go Ukraine, and now we're starting to see a divide in that.
And it's just past the 1-year anniversary that Russia has invaded Ukraine, and so it really hit the news hard recently, and so people are getting a second look at it.
Yep.
The U.S. is sending a tremendous amount of aid in terms of financial over there. It doesn't seem to be going anywhere the way we would like to see it, being done, but we're not getting involved. And so it's just a constant drain on the news, and our thoughts. So,
well, it's a terrible situation. It didn't even have to happen. I feel like if there had been stronger connections with Russia at the time, we could have given them an out where they all win, and that's the problem with all this war is how does everyone win? And I don't think anyone's really brokering that. I'm a little frustrated that Biden's over there. We're going to back Ukraine no matter what, and I'm just kind of scratching my head going, I don't know if that. I mean, our actions can do that, but I don't know if that needs to be our rhetoric. I mean, these people have nuclear weapons, right? I mean, come on. But I don't know. I'm not I stayed in a Holiday Inn Express one time, so maybe I'll just leave it to the foreign policy experts, and that's what the president needs to be saying, and I need to fall in line.
Yeah.
So I'll
It's
say
a tough
that,
one
but,
for sure. It's a tough one.
But yeah, I think the number 7, China possible invasion of Taiwan, only because, okay, I mean, we're talking about what fears.
Yes.
All right, so I sit there reading what I read and going, all right, so if China's going to supply weapons to Russia, and then Russia and now Ukraine with U.S. military weapons, I mean, it's like taking 2 toddlers and then you're going to like say, hey, quit fighting with spoons. I'm going to give you bottle rockets. This is not going to be good for anybody. Casualties are going to go up. It's going to be worse than it already is. But then you look at, okay, is China not using this as some form or fashion to hope that Russia will defend them when they invade Taiwan, which, according to the Wall Street Journal opinion article by, who was that written by? I think I thought it was a sitting general, but sitting generals would not write Wall Street Journal opinion articles. So it was somebody that was interviewing someone from the military. Anyway, I should know this better than I do. But the bottom line is the U.S. has not invested enough time and money into the Pacific operations. We've focused on the Middle East for 2 decades, maybe more now. And so they did a simulation of what would happen if we went and defended Taiwan. We'd be out of weapons in the Pacific in 3 days. Like, China has the advantage at this point, and they have no idea how long it'll take us to build an arsenal to be able to defend even our own territories in the Pacific Islands. And so, and this was in yesterday's opinion article, if someone wants to look that up. But it's that startled me because, I was just a kid in the 80s, so I didn't really think about possible nuclear war or, the Red Soviet Union. But now I'm like, holy crap. And we don't have enough people in the military. So then you think about draft. If something like that were to happen, well, that's my kids. My kids would be in that draft. So you start going, holy crap, like this world could go downhill really, really quick if we don't have an adult in the room.
and that's what people are.
And that's what people, and that's what people are worried about. I'll jump into that bandwagon because I think about this. I was like, who's in control and who's thinking about me, versus your political power. That's really, really frustrating. National debt ceiling and debt default. So I don't know. Does it matter?
It never has.
Does the ceiling even matter?
It doesn't. It's something that was instituted years ago that they wanted to make sure that before they went beyond a certain level, that there was recognition of that, and that they all agreed to do so. They being,
Right.
Congress, essentially.
Right. Now it's become a political
and every year
issue.
it happens, or every periodic it happens. And
Right.
And all it's become is a bargaining chip.
I mean, we print our own dollar. If we lived in Europe and every country had to use their economy on one currency that you can't control as one nation, that's a problem. We could devalue our dollar to the point where you can make everything affordable. I would say that'd be a good thing. But the point is I don't know that the debt ceiling. I mean, I remember it used to be a campaign thing. Remember Ross Perot, and he had little charts and he'd point to it.
You remember those years? Those are great.
Those are great, right?
Ross Perot.
The debt default. Yeah. I mean, you just print more money and you pay your bills. I don't want to be that nonchalant about it. I think it does have a long-term effect at some point.
There was that one point in time where Standard & Poor's and Moody's did downgrade the U.S. debt.
Well, that was during the financial crisis when we got all political and we decided we weren't going to pay our bill. We ended up paying the bill, but yes.
As a side note, they had to downgrade everybody else's debt as well because nobody could have a higher rating than the U.S. government. So everybody who had an A+ or AAA rating, they all got downgraded by default.
Right.
Wrong word there.
Right.
Bad word. But that happened but it doesn't mean that their debt was bad. It was just meant that they had to downgrade it to be in relationship to the U.S. debt being the superior debt quality.
I'm a little more cynical about it because I go back to Moody's and S&P was being raked over the coals for giving big ratings to all those credit default swaps and everything else, right? So I feel like it's almost like retaliation to the politicians that were criticizing them. But that's looking back. Rising energy prices, that kind of goes along with inflation, but
a little bit, yeah.
If you have inflation, again, you want to be owning stocks. You don't want to be sitting. If you keep your money in cash, that's the worst thing you can do if the cost of living is going up. Even if the stock market declines for a while, you're still better off in that position than you are holding cash. You found this one on the web still, huh? COVID restrictions. I mean, I guess in China, right?
There's still places with COVID restrictions. Absolutely.
In the U.S. too?
Yes.
Man.
I mean, yeah, certain cities, certain, municipalities.
It's hard to imagine.
Yeah.
Supply chain issues.
We still see some of this. And it's tied also to labor. Supply chain and labor right now seem to be tied together. In that there's demand, because we're seeing it from the inflation standpoint, but there isn't the raw materials and the manpower to put together the production to satisfy the demand. So what we're seeing is it's causing part of the inflation. Okay. Now, in that sense, you talk about, is it good to be in stocks? Yes, that gives companies purchasing or pricing power.
Yeah.
In order to raise prices to go along to meet that new demand level. So you've seen the old, supply and demand curve. Prices adjust to meet the supply and demand.
Crime. What did you find out that people aren't investing because of crime?
I think it's something that people worry about. We also see companies moving as a result of that. Small businesses getting out of business because of storefronts. We see it. What happens with crime is that some of the retailers are reporting large amounts of, there's a word for what they call when people steal stuff, and then they have to add that to the price of the goods that are still on the shelf to make up for it. So that, increases the inflation and
social unrest. And we went through that in 2020, racial-based riots.
Mm-hmm.
Interesting, the riot that took place here in Atlanta, I didn't even know it was happening. It's usually how in tune I am.
Cop City?
Yeah, over Cop City.
Yeah.
I guess they arrested 23 people and only 2 from Atlanta.
Yeah. Only 2 from the state of Georgia.
Jeez, that's crazy.
Yeah.
It goes back to woke. I mean, I'm a firm believer, you go woke, you go broke. We're starting to see some backlash.
We are.
Did you see the chocolate bars advertised?
I saw something about that this morning where
so Hershey's the company has gone just done some ridiculous woke things, and so Daily Wire, which is like a huge enterprise now, created, instead of Hershey, got it? They created 2 chocolate bars, she, her, and then he, him. And you can buy these chocolate bars that are she, her, he, him, and then in the advertisement, you guys need to go to YouTube and watch the advertisement, but the advertisement says one of them has nuts, you can figure out which one. So evidently orders have gone through the roof for the Daily Wire chocolate by, I can't remember the name of the company they're using that with, but yeah. I don't think they're going to be in a gas station near you, so I don't think Hershey's is probably too concerned about this, but it did kind of break social media there for a couple of days. Political polarization. I mean, that kind of goes with the whole woke thing. And the bottom line is a very small minority are getting a voice, and it's not even a reasonable voice. It's just ridiculousness. Right.
And there's a platform that they can utilize right now, and they are. And so it sounds like it's a majority voice, but it's really not. It's a minority voice for sure.
Right.
Yeah.
Yeah. And it's absolutely destroying us. But for whatever reason, I could get why you look around the world and you don't agree with this, and then you're like, oh my gosh, this is ridiculous. The world's going crazy. But at some point, companies exist to make money. So at some point, when they realize that, this isn't going the way we thought it would, then they'll change their rhetoric back. You know,
the companies will.
The companies will.
Yeah.
I don't know what's going to go on with Disney. I mean, obviously, their district has been officially moved out of their special tax treatment, and they'll have to be paying more taxes. Actually, they'll be paying taxes like any other corporation. So they're just, you know, I don't know. They didn't seem to be that big. Well, I guess the CEO lost his job over it. You know.
They brought Iger back.
Yeah.
Yeah.
So, homelessness issues. I mean, we don't see that so much locally, but
no, we don't see it here. We see it on the news,
yeah.
and it may be a very segmented issue,
Right.
but it's just right there.
Right.
I mean, it's a terrible thing, and it gives the impression of the greater economy, you know, getting worse and worse and worse, and possibly going into a recession. So it's used in tandem by the news to tell a story.
Right.
That people, if you hear it enough times, you begin to believe it, and it begins to affect how you think about the world and how you're going to live your life.
School boards, parental control over classes taught. I mean, we got critical race theory out there now that people are up in arms about. Before that, it was how we learned how to teach math. That was a big deal. CRT, what's the acronym for?
You said it. Critical race.
Oh, that's critical race theory.
Yeah.
Okay, got it.
Mm-hmm.
Yeah, I mean, it you look at it and for most of us, it doesn't make sense. But, you know, I think erasing history, to me, that's kind of frustrating. You know, we tearing down these monuments. And it's still happening. I saw one recently being torn down somewhere, Virginia, I think. People cheering. They have no idea what they're doing.
Right.
They're just creating unrest. Bear markets and stocks around the world, bear markets and bonds around the world. So, you know, we see declines. We're looking at statements from last year going, but it's been a great decade. That's the point. I hate annual statements. I wish we could show people like since inception, and we do. We do that in our client portals, but you should never be judged over 1 year. And I'm not saying us as managers. I'm just saying it's 1 year. So what? It's
right.
1 year out of how many more do you got to go? For most people, it's 30, 40, 50. You know, keep adding it up, right?
Mm-hmm. You know, my favorite is to look at these charts. We call them mountain charts. You know, and you look at them over long periods of time. And periods like last year, you can't even see them.
Right.
You know? Yeah. You know, because it's just mitigated so much, so greatly by these long-term charts. They're so small.
You think about generational wealth, it really doesn't matter then. You're talking about hundreds of years of generational wealth being passed from one family to the next generation. It's a long game. It's about collecting those dividends, right? Collecting the dividends and interest and reinvesting those. People look out there, they see home affordability is low, lack of workers while the record of job openings exists. I mean, that's an economic indicator that makes people kind of nervous.
And it confuses people, you know, as to why aren't people going to work?
Right.
Okay. There's the job. It's right there. Just all you have to do is go take it and then do it.
It's beyond a generational thing, but yes. Income inequality. I mean, that's been something that's bothered people for years. I don't know. I read reports that it's not as lopsided as we think it is, but I really think it's industry specific, honestly.
It is, and it's tied greatly to education and other things.
Right.
Okay, so it can't be, held up as a single indicator in and of itself.
Yep.
Yeah.
Skyrocketing rents. That's a big thing for people coming out of school.
It is.
You're going to pay more in rent, and then your first home, we have to save a lot more than what I did. Right.
Yeah.
So,
and it creates a housing instability because people move around. They don't know how they're going to afford the rent.
Yep.
Chat
GPT, technology, AI,
mm-hmm.
the future.
Technology is here to stay.
It's going to eliminate white collar jobs.
The rate at which it becomes integrated in our daily lives is going to get more and more and more. And so we have this whole debate and conversation about the chip makers. And there was just a law that was passed and signed into law regarding chip makers can apply into a fund to help offset costs of building supply, and we talked about supply chain of chips in the U.S. so we have a secure source for them. Okay, well, people say, well, that's just government handouts, and they call it whatever they want. But bringing, or at least onshoring, the supply of chips as it becomes more and more and more integrated into our society and our lives. I mean, this is a huge thing. This is necessary to do. So, but what it's costing the government, what was it, 120 billion dollars or something?
Right. Gun violence, price gouging by corporations. That's just goes back to distrust in American institutions and ideas.
There it is.
Government, business, schools. That kind of summarizes our
our
last 5 things here, where student debt, taxes in the IRS, green energy costs, energy independence, geopolitical concerns, Russia, China, Middle East. I think really it comes down to when people start getting fearful. Here's the thing. When people get fearful, they think about things. They think, man, the world's going to pot. And they see the news and they see who has a voice now, who's directing morally the compass of their it's not even maybe the countries, really almost like their neighborhood or their zip code. It
was something that I thought of as I was coming towards the close of this, and this, I think you're hitting on it, is that people worry about who's in charge.
Yeah, and that's how they feel.
Exactly.
So I go back to, okay, we have some real concerns. I'm concerned about geopolitical concerns, Russia and China right now. That's probably bigger. That's probably bigger to me than the economy. Economy would be number 2. So one is, am I going to die in a nuclear war? That would be my top concern. Number 2, my concern would be just economic direction, meaning the government and what they're doing to our economy. But so those 2 things are big. I can't control those other than by voting. Voting is really what changes those two outlooks. But I just go back to, okay, where does the world go to do their startup? Are they going to China? Are they going to India? Are they going to South America? Are they going to Europe? No, they all come here. They come here to do their stuff. Why is that? It's because the free market capitalism works. We have a free market. I would argue the smartest people are probably in China, maybe even Japan. Where do they come to get educated? They come here. Where do they come start their startup? They come here if they get a green card. Right? So where does the world going? The world is coming here. We are building industry here. Where is AI language being developed here? Where is who's launching rockets and landing them back on the pad and taking people to Mars,
station.
or space station, but the moon soon, then Mars. Who's doing that? We're doing that here in the U.S., right? And so ultimately, all this is noise. And the bottom line is, where do companies come, start up, build, grow, and where do we make people wealthy? We make people wealthy in the United States. There's other wealth out there. The Middle East, oil,
right?
Right. So as long as we need to have oil dependence, then those people will also be very, very wealthy in a very different way. So all these things are concerns. All these things are reasons why, man, I don't think that I don't like my. No one really ever. It's funny, in Congress, everyone always has a negative opinion of Congress, but yet they keep electing the same people over and over again. Where really it's the president that takes the blame, right? Positive or negative. So I don't like who the president is. I'm not saying I don't like the current president. I'm just saying figuratively. Right. I don't like who the president is, and therefore I'm going to just take my money to cash, or I'm just going to sit on the sidelines until when? Until you feel better. There's no math to that. It's just based off feelings, and people do have a risk tolerance. They do have to sleep at night, right? So I recognize that, but you're talking about destroying wealth building techniques.
Right.
Which
the next thing is the opportunity to build wealth through this technique called investing in the U.S. economy and corporations in the U.S. and throughout the world.
I mean, I'll give you an example. Many, many years ago, I was counseling a small business owner who owned a dry cleaners. It was the weirdest situation I think I've ever been in counseling small business owners. These people were not business owners. These people were hard workers. It's a very big difference. They owned a dry cleaners. The dry cleaners is in front of a Church of God. Okay, it's a rural town. There was another dry cleaner location down the street, which much better location that they had secured, and that they were doing more business out of there than they were at this other location. But they just had tons of debt, made the terrible mistake of not paying their employment tax, their share of the employment tax to the government. So you had the IRS breathing down their, or Department of Labor breathing down their neck, right? So I tell them, look, you need to sell the old location, pay off your debts, reinvest that capital into the new location, and then this is our projections going out, right? Can't sell that building. That building goes up for sale, right? Church of God wants to buy the building. They don't like Church of God. I'm not going to sell it to the Church of God. I'm not selling it. There's no other buyer, right? And so they let their personal feelings about a religious organization get in the way of their financial success. So what did that, it had no bearing on, you see my point is they got so worked up and so emotional about it. I had to get in my car, drive up there and see this is an emotional decision, which is not, you're not getting married to anybody, right? You're not endorsing the church. You're not unendorsing, the church. You're just, it's a business transaction. That's all it is. It's a business transaction. If they came in here for you to do their laundry, would you do the laundry? Oh yeah, we do their laundry. Yeah, no problem.
Probably members of the church they did do laundry for.
I'm like, what the heck?
Yeah.
And so, eventually they sell, they get a good price, and we move on. That's exactly what people are doing with their investment portfolios. They're looking politically, and they're going, I don't like this president. I didn't like Trump, or I don't like Biden, or I don't like whoever it was before there. It doesn't matter. And they go, I'm moving this stuff to the side. It's an emotional decision that should not affect the future of your family and your income. Right?
That's right. We
wouldn't shut down our business because, oh my gosh, the other political party won. It's not like we're in Italy, in the south part of Italy. You have to, you can do pretty much almost free enterprise, but the northern part, the wealthy part, you have to buy out politicians to do business. and I had a long conversation with a financial advisor who was from Italy one time, and I learned all about this, which is very interesting. But the bottom line is we can't let our emotions dictate our financial success. We have to separate. So you sit there and you tell yourself enough that there's a problem. Eventually you fixate on it, and eventually it becomes truth. And none of what you formulated is truth in relation to a portfolio.
Right. It becomes truth only in your own mind.
Yeah.
And you begin to calculate factors to bring that truth into your reality. Okay. And when that happens, you're completely rejecting everything else that's going on in the world. Now, there's an old saying in investing, and that's that stocks climb a wall of worry. Okay. It has been around for a long time. And you look at charts and you overlay that with tough economic times, and you see that stocks advance prior to the worst of times. Okay. So by getting out of the stock market in times that you think that things are going to get bad, okay, just because is that you're probably at the point where you're going to miss out on the best returns that the market's going to have to offer over the next time period. Yep. So by climbing a wall of worry, and we've just listed out 30 some things that people are probably worried about, this is a wall of worry.
We had during the financial crisis, great friend of mine, Gary Kitchen, he passed away in 2021, I believe,
during the pandemic.
Of a stroke, not from COVID, but he was a golf buddy. and he was in his early 70s, but I remember in 2009, it was about February. Now it's kind of the bottom. We got down to by March it was Dow 6,500, which is hard to imagine that today, right? He says, I can't take any more. You need to liquidate everything. And thank goodness he, was a friend, and thank goodness he was someone who had been with me for a while at that point, 8 years, I guess. And I said, you can't do it. You're going to have to ride this thing all the way through. If you get out, you won't ever be able to retire because of the losses that are happening in the portfolio. And I remember telling him, it's like, look, I'm not hitting the sell button. If you want to do it, you come up here to my office and you hit the enter button. I'm not going to do it. And he was kind of shocked by that comment, and he kind of backed off. And we would joke about it every now and then over lunch or something, but he's like, man, if I had sold back then, I'd still be working somewhere, Walmart greeter or something, right? And so that's where financial advice comes in. We have our times of panic and like, oh my gosh, are we doing this right? This is so bad, right? But we're also professionals, and we know what the data says to do.
Yes.
And we also know what's possible. We're not creating fairy tales here where, yeah, you can make money in the market on the way down. You can make it on the way up. I mean, that's not reality. You can. It is possible, but not on a regular basis to where you would be successful at it long term, right? So in Gary's case, he stuck with it. I don't think that we've had clients go to zero. We've had clients leave our firm. We have a 99% client retention ratio. But we had one client leave a firm last year because he thought that we should have known to sell at the top of the market, and because that we should have known that was the top. and that's not that. I don't know how he ever came up with that. I worked really hard with him to focus on planning because, quite frankly, planning he was a complete mess. But he didn't understand. He's a smart guy, very smart, but he didn't understand investing. And it's okay to be scared of markets or don't like the volatility of the markets. You can't go to cash. You could also create a real estate empire if you wanted to. It's a little harder today, but 5-6 years ago, it would have been a great time to build rental properties, and you could just skip the whole market thing potentially. You wouldn't have liquidity, but you could have cash in real estate. And we're not saying it has to be in an investment portfolio, but you got to be doing something. It's in your business. It's in the market, but we can't be sitting in cash, and we're going to save cash. You lose what? Last year you've lost 8.25% in cash, just the inflation rate for the year.
Exactly.
Right. Mm-hmm. So it's all these are fears. Oh, one we didn't add to the list, which I just thought of, is global currency. U.S. dollar no longer being the global currency, and there's lots of articles about that, and I have a couple of clients that often will talk about, what if the U.S. dollar is no longer the global currency? Well, hopefully the people that we're electing is going to make sure that we're dominant enough to be the world currency. It sounds like we got to get some more missiles built for the Pacific, but it would be really hard to move off the dollar, I think, globally. But we're starting to see some of that already with Russia because of them being isolated. Everything has to be in rubles now, right?
For them.
Yeah. Correct. Now they don't dictate world policy at this point at all. But no, there's a lot of things to be fearful of. But the bottom line is that fear should never guide your investment strategy. Fear in of itself should not be an investment strategy.
Right. Fear is not a strategy. Warren Buffett has made the famous comment that, in investing, be greedy when others are fearful.
Others are fearful. Yeah, that's right.
Yeah.
I had a flight attendant call me one time, and she said, well, you're taking really good care of my things for me, my financial affairs, but I just want to let you know that I was working a flight to Alaska, and this guy was going there, and they're eventually going to leave from there to go up to the polar ice caps, and they're basically measuring the electricity from the poles of the Earth. If I'm saying that right? Uh-huh. And they believe that the earth is making some changes to where the poles would change and basically everything electric would just shut off. And she says, what are you doing to protect my portfolio from that?
If that happens, we got much bigger problems to be concerned about. The magnetic poles change.
If magnetic poles change, I said, you just need Jesus. That's what it comes down to. There's nothing that I can do in your portfolio that's going to benefit from magnetic poles changing. But yeah, I mean, we can't live our life in fear. As I tell my teenage daughter sometimes, I say, you're really moody today. Who's stealing your joy? And if you find out that it's the news media,
turn off the news.
Turn off the news. Yeah, turn off CNN, man. CNN, they really like to focus on the negative and the sky's falling because that's what sells. It's not that they're evil people. It's just that's what sells. And so that's what you think becomes you think that's normal, right? You think that's a normal world, and that's not a normal world. Normal world's very different. It's not all riots and inflation and high gas prices. There's a beautiful country to get out there and go see. And this podcast here will report live if we have to, if capitalism is being destroyed. But I don't see any signs of capitalism being destroyed.
I'm not going to write that one up yet.
No, I don't see it. Do you?
No.
I don't.
None of it.
I haven't seen. I mean, I see people complain about it. I see politicians complain that Elon Musk and Bezos and Bill Gates have too much power as individuals, and maybe they do. I don't know, but they all started from zero.
That's the common denominator there.
And they made a lot of people wealthy along the way, not just themselves.
Mm-hmm. Paid a lot of taxes.
Yeah. So you got to separate your worldview from the portfolio, and you got to stay away from individual portfolios that are focused on political themes, sector rotations, and focus on core. Just hold the core indexes. Statistically, in the past, you've always been fine since the 20s, and my bet's on the future and America that will be just fine going forward too.
I'll see you there.
All right, Brad. Good conversation.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced and edited by Ken Hoadley.